Crypto Trader is proudly brought to you by eToro. Discover a simpler way to trade and invest in cryptocurrencies and more.
This week's edition of Crypto Trader starts right now. I'm Crypto Man Ran, and with me in the Tel Aviv studio, I've got some of the biggest names in crypto Israel. I've got Moshe Chogeg, CEO of Siren Labs, Daniel Pellet, CEO of Orbs, Yoni Assia, founder and CEO of eToro, and Yaniv Feldman, CEO of One Alpha. Tonight on Crypto Trader, we're going to be looking at the stories that made crypto news headlines. 3 weeks away from the end of September, what will the SEC decision be around the proposed Ran Neu-Ner ETF? And when can we expect to hear about the 9 ETFs where the decision was recalled? Tonight, we speak directly to the SEC. The SEC is considering a revamp of the accredited investor laws. What does this mean for crypto? ICO funding in August increases to over $500 million, but should we be bullish just yet? We look at the future of Ethereum against the background of a depressed ICO market and an imminent futures launch. Bitcoin battling the key $7,000 level. Is the worst over yet? We take a look at the charts to see if there are any hidden clues. This is a show you don't want to miss, so stay tuned. 3 weeks ago, the SEC rejected 9 proposals for Bitcoin ETFs that were based on a Bitcoin futures market. But then in a surprise move, they recalled the decision for further review. There's also one particular Bitcoin ETF application with the SEC that's got the crypto community in high hopes, and that's the Ran Neu-Ner ETF decision due at the end of September. With me on the line to give us some clarity and insight as to what's going on behind the scenes at the SEC, I've got Commissioner Hester Peirce. Hester, good evening. Thank you for coming on Crypto Trader. Sometimes we think that all you guys do at the SEC is review Bitcoin ETF proposals. How busy is the Bitcoin ETF keeping you guys?
Well, that's actually just one of a lot of issues on our plate. And so it has been something that's taken a fair amount of staff time recently, but we actually have a wide array of issues that we're looking at, crypto and non-crypto issues.
Hester, the 9 denials that came from the SEC for the ETFs that were based on the futures, not the spot market, were later recalled. Give us some clarity as to what actually happened behind the scenes on this one.
So what normally happens with these rule filings that exchanges file, which is how this was being considered, is that the staff will act on delegated authority, and then the SEC, the commission, which is the 5 of us, and now in the current status it's 4 of us, can decide to pull up a decision that the staff made and to reconsider it at the commission level. And so that's what happened here.
Now, is it normal for the SEC to issue a denial and then to recall it, or is that something that fell through the cracks?
No, that's a normal, I mean, it's fairly standard for these things to go by delegated authority and to just be final. But it's not unusual because there's a period of time within which the commission can recall it, or one of the parties could have recalled it also, called it up for commission consideration.
Gentlemen, how important is this Bitcoin ETF?
I think that the Bitcoin ETF in general is sort of more of a signal to what the industry is hoping to happen. I think that people are looking at the ETF more as an agreement of the SEC for Bitcoin to be something regulated or something that they can regulate, so that people who are afraid of what's going to happen will be able to invest much more safely, I would say.
So what you're saying is they're going to legitimize the asset by doing an ETF. But is the ETF market so big? I mean, is this, when we get an ETF decision, does this mean that we're going to then get this bull market back?
I don't think the ETF will have a significant impact on the actual holding in the market in the short term. So the signal is important. It legitimizes Bitcoin. But if you think of gold ETFs, if I'm not mistaken, it's around $100 billion, and it took more than 10 years to get there. So we can expect probably less than $1 billion in the Bitcoin ETF in the first 6 to 12 months, which is not that significant to the market. I also think that what we really want to see is people holding Bitcoins and understanding how to hold Bitcoins and how to transfer Bitcoins. And I think the real change in the market is when we'll see institutional investors being able to actually hold crypto assets, hold Bitcoins, and actually custody them or with a third-party custody rather than going through the traditional infrastructure markets.
But isn't that a requirement for an ETF, is that the underlying asset actually gets held somewhere? Is that not the difference between an ETF and, say, a futures product?
Definitely there are ETFs that are holding the underlying asset and some others are holding future. They have to have it backed. But I think that's an interesting point that has been raised is regarding the security of digital asset. A lot of people within the ecosystem think that because you can hold the private key, you can become your own bank. And I don't necessarily agree with that because it's very hard from a security perspective to secure digital asset. Most of them over the years have been stolen. If I have a heart issue, I will go to the doctor. I would not try to operate on myself. And the same thing for big amounts of funds. I would want it to be secured by somebody that is professional. So I do think that for mainstream adoption, we do need to see such instruments, or we need to see real custodial solutions that institutions can join in, and also the mainstream. There is a reason why one of the fastest growing companies in the space is Coinbase, because they help you buy and sell digital asset, but they're also the custodian. And that's really what a lot of mainstreams are looking for.
Now this brings us into discussion around institutional money coming into crypto. And I think the hope from the crypto community is that the ETF is the bridge for institutions to bring money into crypto. Is institutional money actually in crypto at the moment?
I don't think that any kind of significant percentage of institutional money is in crypto right now. I'm agreeing with Yaniv that this signal of legitimizing Bitcoin is very important from psychology side of perspective, okay? Because then you have a rainbow of private equities, hedge funds, pension funds even, that can take a small, tiny portion of their portfolio and put it into crypto. Then with the growth of user experience, different applications, then we'll see the mass market joining us. But institutionals should be the first step, and ETF should be the first step for them.
Gentlemen, are we going to get an ETF before the end of the year?
I assume not, unfortunately, because I don't think that the industry is ready for that in terms of both custodian solutions. I think there are, but they're not, in the institutional level. In addition to that, a lot of the comments that the SEC had when they declined previous ETFs were about market manipulation in unregulated markets. And the fact that a lot of the volume is still right now in unregulated markets, we are witnessing every day wash trading and market manipulation that affect the price, even in so-called regulated markets. And that's a problem. When you want to regulate an asset, you want it to be safe for consumer usage. That's a problem. Even though that in the traditional markets, it's just the same. It's just that in the traditional markets, people do it under the table, and in crypto, they're doing over.
So, Yaniv, if you remember the Hester Peirce dissent that she published, she said that the SEC has no jurisdiction to look at the underlying asset, but only to look at market manipulation in the actual ETF. And she said that if gold or oil were applied the same test as they applied to Bitcoin, both gold and oil would fail. Yoni, are we getting an ETF before the end of the year?
Well, speculating on regulators' decisions is as bad as speculating on the price of Bitcoin. In the long term, we'll see a Bitcoin ETF. Whether it's this year or next year, nobody really knows.
Daniel?
Yeah, I also think definitely that it will take a little bit more time, but we will get there, and I think it will be positive for the ecosystem, and it will bring more people involved. I think right now it's still too soon because there are questions that applying it on digital asset is difficulty. For example, in a case of a fork, what happened? How do you value the asset? In case of custodianship, what are the guidelines? Nobody wants to insure digital assets at the moment, so I think it will take some more time.
There are some insurance already
just
for digital assets, so we've seen that progress. There's been a couple of news.
Just last week, there was an announcement that in the Lloyd's insurance market, there were a few companies willing to insure both custodians and exchanges in crypto assets. So it is warming up, but like you said, it will take a little while longer.
I would add one thing about that. One thing about this, in the end, the SEC can't tell accredited investors what to do with their money. And that's a big problem if they do that. So I think in the long term, there's no question about whether it's going to happen or not.
Hester, Chairman Clayton came out this week with some really strong statements around accredited investor laws. What is the SEC thinking around that?
Well, I can't really speak to what my fellow commissioners think about that topic. I will say that I think it's an area where the accredited investor standard has served to prevent a lot of people from investing in certain segments of the market. And so I think that I would like to see it broadened so that more people could invest in more types of investments. I don't actually think there's a good reason to have an accredited investor standard at all, but I'm also a realist. And so given that we're going to have an accredited investor standard of some kind, I think we need to take another look at it and see whether it properly encompasses the full range of investors who should be able to invest in private offerings. And so, some people have suggested, for example, a sophistication test. Right now, we sort of use money and income, wealth and income as a proxy for sophistication, but there may be better proxies or additional proxies that we could add. And so I think that's where some of the thinking on the outside has been, and I would suspect that would be the type of thing that folks here would be amenable to looking at.
Hester, you mentioned that you don't believe that the USA should have accredited investor laws, but the SEC has a mandate to protect the man in the street who may not be as astute as some of these accredited investors. Don't you think that if the SEC stops with these accredited investor laws, some investors may make decisions that may come back to haunt them?
Well, I think that's, there is a real value to having freedom of choice to make your own decisions. And that's sort of a fundamental principle of what our country operates on, which is that people can make decisions and act in ways that they think are wise for their own lives. It's very difficult for me as a regulator to know what might work for an investor out in the middle of the country. I think, well, I can make a better decision than someone in the middle of the country. That's ridiculous. That person knows her own life better. She knows her own resources better than I do. She knows her own limitations better than I do. And so I think it's really presumptuous of me as a regulator to come in and say, well, I've decided that you're not smart enough to invest in this particular type of investment.
Up next, I've got Anthony Pompliano to talk to us about the proposed implications of these amendments. And so good to have you back on the show all the way from Virginia. What do you make of this news from the SEC?
Yeah, look, thanks for having me. I think the SEC is trying to do their job, right? They're trying to increase the access that retail investors have to the private market while also providing the protections that they're mandated to provide from an SEC perspective.
But what does this actually mean? What are the implications of if such an amendment is passed? What are the actual implications? I mean, can we expect to see more fraud? What are the other implications?
Yeah, I think there's two key pieces. So one is we have to remember that the accreditation laws are literally the rich get richer written into law, right? In my opinion, these are laws that use wealth as a signal for intelligence. And so we've got to move away from that model into something that's more education or knowledge-based, right? So one that would allow anyone the opportunity to participate in these investment opportunities as long as they had the right knowledge. And I think, two, is what you're going to see is in that model, you would see a much more sophisticated investor base. You'd see a more robust capital inflow to the market. And, of course, you're also going to get plenty of kind of fraudulent activity. But the SEC is well equipped to kind of identify that stuff and ultimately enforce on it. And so I think it's a net good. And we'll have some kind of rocky, ups and downs in the beginning. But ultimately, we should allow individuals to invest in the private market opportunities that have proven to be the highest returning asset classes over a long period of time.
And were you surprised from these comments, or were you surprised by these comments by SEC Commissioner Jay Clayton?
Look, frankly, I'm not very surprised in the sense of if you really think about philosophically what's happening here, right? The United States is the land of the American dream. So people around the world can come to the United States, and anyone, regardless of your nationality, your language, et cetera, have the opportunity to build wealth and build a life of, kind of happiness, et cetera. Well, these accreditation laws are preventing people from doing that. Unless you have a certain degree of wealth, you're not allowed to participate in this wealth creation asset class. And so I think that, it's about time we get rid of these things, and to see the SEC kind of publicly making this stance is not only one encouraging, but two, it gives me quite a positive sense that we'll actually see change here.
ICO funding is on an uptick once again, with over $500 million raised in August. This after the funding reached a low in July of $417 million. Though these numbers may look encouraging at face value, a closer look reveals that the numbers in August included $100 million for the Hashgraph raise and $134 million for the T0 raise. Still, the numbers for 2018 are sitting at around $11.5 billion raised in ICOs, as compared to only $6.5 billion raised in 2017. The tough markets have caused a flight back into Bitcoin, sending the Bitcoin dominance to over 53%, and this has raised concerns around the long-term viability of the Ethereum network, which has positioned itself as a platform for raising money for ICOs. Now, gentlemen, I'm going to look at you for this discussion, because between the two of you, you probably represent over 60% of the crypto GDP in Israel.
In Israel, yeah.
So let's talk about, first of all, there's two discussions here. The one discussion is around ICOs. Is the ICO market, the utility token market, dead?
No. You want to start?
Go ahead.
I think it's definitely not dead, but it's definitely...
on life support.
Yeah, on life support. Let's see what happened. This is very important, Mid-17 started the uprise. A lot of ICOs raised a lot of money, but then what? Then a lot of excitement from the retail investors, but all of those projects need to pay salaries. So what did they do? They converted most of the Ethereum and Bitcoins back to fiat money, actually supporting the industry, but fighting it at the same time, without understanding. But this is what happens. Market started to go down. A lot of people lost a lot of money. But right now, what we see, what I feel we see, is that most of those projects invested their money in creating value. And this value now is starting to float. And I feel that actually right now, when everyone is running away from this market, is actually the best time to join the market, just because of the value creation that all of those ICOs created in the last year.
Now, when you say the value creation, are you talking about ETH or are you talking about utility tokens?
No, I'm talking about utility tokens, and I'm talking about different companies. We spoke about security tokens before. We got to understand utility tokens are an invention that happened because security tokens regulation wasn't exactly the right place. I feel that in the future we'll see much more security tokens than utility tokens. But again, when you look at those two things, that ICO sold, but now the creation is floating. If you look at Daniel project, Orbs is going to be live soon. My project, Syrian, is going to be live soon. There's so many different projects that are going to launch in this year, and you're going to see all of the money that was raised coming back to us.
Now, let's talk about Syrian, and we'll get to you in a second. You guys raised a lot of money in Syrian Labs, and I'm assuming that you raised the money mainly in Bitcoin and in ETH.
Yeah.
But you've got a runway in US dollars. Your advertising costs and your product development costs are in US dollars.
Yeah.
Does that mean that you are releasing ETH into the market now at $250?
Yes, it is.
Which means that you're part of the problem in pushing the prices down.
100%.
Yeah.
Yeah, that's what I said before. We need to pay salaries. We need to pay suppliers. But this money doesn't go out of the market. It goes back into the market by creating value. Once our product is going to be, by the way, it's not such a long time. We're talking
long
about
term, I said.
yeah, also long term. 6 months became super long term. 1 year it looks like the future in crypto space, right? But in the next 3 months, we're going to launch our phone, and you're going to see all of those dollars that we converted from ETH to fiat back into our token.
The utility market, are you still bullish?
That's a great question. I must confess that in 2018, I don't think really there were too many utility tokens out there in the market for two reasons. One, I think the infrastructure layer is still very immature. There is a reason why there's 3,000 dApps on top of Ethereum. Nobody is driving transaction. Nobody is driving usability. CryptoKitties is about 150 daily users. Augur is about 60 daily users. And the reason is because the infrastructure layer, the L1, is still very immature. And I think 2019, the focus will be to build the third generation blockchain, the L2, the production layer on top of the L1, the liquidity, trust layer. So solving problems such as scalability and update models and governance and privacy. These are very important things before we can actually see any utility tokens. Secondly, there was obviously a lot of hype in 2018. I can assure you that even if I take one of the best projects, I think, out there, Telegram, 200 million users, amazing execution, all the ecosystem is built on top of them, amazing track record, amazing technology. But if you ask a normal person, why did they buy more than $10,000 worth of Ethereum token, worth of Telegram tokens, and I bought much more, I'm not sure they will tell you because of the services that Telegram will provide you. I'm not even sure yet what these services will be. So utility tokens, I think for most project out there, is not really the case. I do believe in utility tokens for blockchain and infrastructure that pay for the security and the distributed consensus.
Now, Yaniv, I'm going to look at you because you sent me an article last night about that was written in TechCrunch about the future of Ethereum and alluding to the fact that the Ethereum network is doomed because the ICO market is dead. Do you believe that that's the case?
So first off, the article was written by a guy who is an advisor to Stellar, so everything needs to be taken under consideration. But I do think that Ether has some fundamental problems in the way it uses ETH as gas, like Vitalik also mentioned. But I don't think that specifically signals the end of utilities.
Well, I gotta say something about Ethereum. Let's remember, EOS raised $4 billion in ETH, and they're competing with Ethereum. So again, they're converting the Ether into fiat money, damaging their competitor, and taking this money and creating value at the EOS. I think that I think Ether is here to stay, but EOS and Cardano are a very good competition to them. So Bitcoin has its own special place, but then when you look at the smart contracts, then you have Cardano, you have EOS, you have Orbs, and other projects that are all competing on the same space.
I think I'm still bullish on Ethereum. I think...
are you bullish because you have to be, or because...
Probably both because I have some, but I think generally it's by far the most used smart contract platform, by far.
Used for what?
Used for everything. So all of the 1,000, 2,000 companies that did ICOs, most of them did it on Ethereum and are developing stuff on Ethereum. Most of them will be...
Moshe, you disagree here. You disagree here.
No, I completely agree. 99
does like this when he agrees.
99% of them are using Ethereum.
And they're building stuff on Ethereum. We're gonna see apps on Ethereum. I think the biggest problem in the ICO market is the moral hazard. People who raised money, are they actually going to deliver? So it's moral hazard and execution, right? But even if 10% of them execute, so think about it. Everything, in my opinion, we saw in 2017, everything we saw is one killer app, 100 lines of code. The ICO... Smart contract. That's it. That's one killer app.
Are we buying Ethereum at $250, yes or no?
I'm buying. The reason, I must say, is because, yes, we experienced growth and even a bubble, and now the price returned almost to the price a year ago. But if you look at the ecosystem, what happens after every boom, the ecosystem is much bigger, much stronger, many more projects, many more developers. And what gives me the most belief that we're going into the right direction is seeing the people that are flowing into the ecosystem from the development side, the research side, the economy side. So I definitely think we are going into a good place.
I'm buying the market. I don't know about Ethereum specifically. I would buy some Ethereum, some Bitcoin, some Cardano, some EOS, and others. So I definitely think it's a very good time to join the market, but I wouldn't take a specific choice.
Again, as I said, I'm generally bullish on Ethereum. I'm going to ask my wife if I can buy some more.
You may need to mortgage the house then.
So I'm very bullish on Ethereum, both on the technical level and the fundamental. I think that Ethereum is among even after everything we said, Ethereum is probably among the only tokens that have fundamental value,
have
real utility. And just because of that, I think that it has a lot more to gain.
Bitcoin took a hit after trading firmly above the key $7,000 level. The currency hit a high of just under $7,500 before a large sell-off brought the price down to $7,000 US. The sell-off was rumored to be linked to the 114,000 Bitcoins that were moved from the Silk Road account. With us in the studio to take a look at the Bitcoin chart is Yaniv Feldman. Yaniv, what are we looking at in the graphs?
So what we're seeing is still a continuance of the 8 months long bear market. Even though in the last months we have been seeing an uptrend, but today's price fall has broken it a little bit. I think that we are still on the rise, and we'll need to see what happens in the next few days.
So you think we have broken the bear market, or are we continuing in the bear market?
No, we are still in the bear market. We haven't broken the resistance level that needed to go outside of it, but we are seeing a pretty long uptrend we haven't been seeing in the last 8 months.
When will you be convinced that we're in bull territory again? What are you looking for in terms of price, specifically when you look at the chart?
Right now, I think that if we break the $8,000 and we sustain it for a couple of days, that will be a strong signal from the technical perspective.
This sell-off that happened today, was it Silk Road?
So there were two main rumors to what happened. One was the Silk Road wallet that was spread around a lot of exchanges being dumped. And the second was that the news about Goldman Sachs freezing their crypto trading strategy, and that affected the market. And I think it's the first, not the second. But because the market is behaving in so many ways not related to what's actually going on, I think that in the long run, we are seeing fundamental value from Bitcoin, and we are seeing the hash rate growing, and we are seeing activity around Bitcoin growing. So I think that right now we're somewhere in the end or the sideways period, and we will be starting to go up somewhere in the next few months.
Gentlemen, we are running out of time, but one quick question for all of you. Bitcoin at 7,000 or Ethereum at 250? Which one do you buy?
Wow, it's hard. I think right now, Bitcoin.
Moshe, Bitcoin?
I said it before, I'll buy 50-50.
You got to pick one.
I got to pick one. Probably Ethereum right now.
Yaniv, Bitcoin at 7,000 or Ethereum at 250? What are you buying?
My heart is always with Bitcoin, by opportunity with Ethereum.
Yoni?
Yeah, I'll buy Ethereum, but that doesn't mean that the price is definitely going up. So that's what I'll buy.
That's all the time we have for tonight. Let me know on Twitter if you like the new format for the show. Next week, we'll be going deep inside the Israeli blockchain scene to see whether the startup nation is living up to its top-notch high-tech expectations. Until then, I'll be on Twitter at CryptoManRun, and you should trade well, my friends.
Crypto Trader is proudly brought to you by eToro.